Hello, good morning. So this is DXY. So I want to see what the week is about to unfold. Alright, so for me to do that, I always want to start from the higher time frame, right? So I don't start my trading week without checking the higher time frame, see where the buyers are heading to, where the strength is heading to. So in that case, I tend to start the weekly time frame, and into extension, I even go to the monthly time frame to see what the market's about to unfold. So from the monthly time frame, we can see that the market is bearish, right? It was bullish, but at this point, it shifted to the bearish, to the downside, right? Shifted to the downside, and we have a fair value gap up here where price is targeting to, right? We have another fair value gap down here, but the reason why I'm confident with the first fair value gap is because I take my fib level, measure from the highest point to the lowest point, right? You can see this first fair value gap is located at the 50%, right? That's the equilibrium. So this tells me that chances are that it may fail, and we want to see price retrace up to the premium level, up to this fair value gap, up to the extension of this bearish order block, and then we will continue to the downside. So from the monthly time frame, we are in the bullish run. Now from the weekly time frame, what do we have? Right, we have said that we are heading to this fair value gap. From the weekly, this was the last break of structure that the market gave us, right? This was even doing the upward movement, right? It left us with this order block, right? Initially, I wanted to see price tap this order block, and then we'll continue to that level, targeting the most recent liquidity, but liquidity is on this one right there, and this one right there, right? And that one, but let's see what the daily does. So from the weekly time frame, we're also in the bullish run, but at the moment we can see the candles doing some retracements. So from the daily time frame, now this is where I want to start doing my market structure. Right, you can start doing your market structure from the daily time frame or the 4-hour time frame. There's nothing wrong with that. So I delete everything. Now I have an idea where the price is moving to and where the big money is heading to. So from the daily time frame, I start doing my market structure. You can see breakout structure right there, price selected from this order block. Another breakout structure right there, breakout structure. Perfect. So what do I have? I have my breakout structure. I mark my swing low right there. That's my sell side liquidity, and my swing high buy side liquidity. Buy side liquidity, as simple as that, right? So after I've marked my dealing range, that's between my buy side liquidity and my sell side liquidity, I now ask myself, what is the market doing? What's the narrative of the market? What is the story that the market is showing me? And I can see that, yes, we are in an uptrend, but the price does not move in a straight line, alright? It moves and it does some pullback. So to this level, I can see that price did a bullish run. At the moment, it's doing the pullback. Why is it doing the pullback? It's doing the pullback up to this. Remember the other block we saw on the weekly that price is targeting to tap before it moves up to the buy side liquidities above. It is almost around this level, right? So from the daily time frame, I also have this fair value gap that is conferencing with the weekly order block, and I also have this order block below this level, which you can also call this zone a demand zone. So from the daily time frame, I want to see price come down to this level, then we continue to the upside, something like this, either from this favor but mostly from the order block, then we continue to the upside. So but we don't do the daily time frame, so I also go to the 4-hour time frame now to understand this retracement. How is this retracement coming in? So from the 4-hour time frame, let me put this very nice. From the 4-hour time frame, you can also see that price did a breakout structure up to this point, it went up, and now price is doing the pullback. Alright. From the hour time frame, this is my fair value gap, and this is my demand zone. Let me name it. This down here is my demand zone. Right, so I want price to come to this level before we continue with the bullish run. Alright, so from the 4-hour time frame, we are doing the retracement, and I want to understand where the retracement is going to end from, so that we can start that continuation move to the upside. So from the 4-hour, I have this internal breakout structure, and the price reacted from this supply zone. Right, you can see there, took this liquidity and reacted from this supply zone, and then I have now my most recent breakout structure. So this is my internal breakout structure, right? We have external structures and internal structures, right? External structures, these are structures that are found outside my dealing range, right? Where is my dealing range? My dealing range is anything that's found between my buy side liquidity and my sell side liquidity. Anything in between this is my internal structures. So my internal structures is simply this retracement. Any structure that is found within this retracement is my internal structures. And my external structures, these are these now that they are found outside my dealing range. This breakout structure, buy side liquidity and sell side liquidity, those are my external structures. And then when we come to internal structures, and we also these structures comes with their respective liquidities. We have external liquidity and we have internal liquidity. So when price is doing the pullback, we want to concentrate on internal liquidities. What are the internal liquidities? Internal liquidities, these are the institutional reference points, your order block, your supply, your demand, your fair value gap, the rejection block, whatever you want to take trade from. Your area of interest, in short, is your internal structure. Not internal structure, but your internal liquidity. And the external liquidity, these are the buy side and the sell side liquidities. Together they form external liquidity. So I don't want to go into details about that. I just want to see what the market is trying to do this coming week. Right, so I have identified my structures, and now I want to concentrate myself on internal structures, and that's because we are doing the pullback, and the pullback has not come to an end for me. to start taking that continuation move. When price will tap to this level, then now I can focus myself on these external liquidities or external structures. Alright, when we are ready to take that continuation up to take this, or if prices want to do the reversal, it will take this and close below, and then you can say we have reversed to the downside. So from the moment, at the moment price doing the pullback, as I've said, and this is my recent breakout structure, right? And that gives me my internal swing high right there. So this is my internal buy side liquidity, right? And this is my swing low, right? My possible breakout structure. Where's my possible break? Perfect. Alright, I'm naming the possible breakout structure, and that's because I'm expecting the price to take this low out, right? For it to give another bearish breakout structure that will continue the movement down to this level. So this is the low that I want price to take. No, this one I don't want to see price taking this high and closing above. If it does that, then that will tell me that this retracement has come to an end and we are no longer coming to this level, and that will tell me that we are going up to the buy side. Alright, but from what I have on my charts, we are not ready to start taking the buy side liquidities. We are only aiming to take sell side liquidity, as it took here. Took sell side liquidity, internal sell side liquidity, closed below, give us the bearish breakout structure. Expect it to do so, take this low, give us another bearish breakout structure, facilitating this pullback up to this level before we continue to the upside. So after I've marked my swing high and my swing low, I just want to mark my liquidity. Alright, for me to do that, I intend to look at the previous day high and the previous day low. Right, from this case, you can see this was my previous day high. That was the high of Friday. Right, and this was my previous day low. I have various criteria to mark my liquidity. I can use previous day high, equal highs, or equal lows. Alright, so that's my previous day high. I want to see price take it out before we do anything else. Previous day high, previous day low. Alright, as simple as that. Yes. So after I've marked my previous day high and my previous day low, all equal highs and equal lows, so we can see that this line there is almost an equal high, right? So you want to see it, price take it out before we continue to the downside. So the next thing is me to see where price is at on my daily range. So I take my fib label, mark from the swing high to the swing low, and see where price is at the moment. You can see price has tapped the 50%, right? It has tapped the 50% of the fib label, that's the equilibrium. So the 50% is where now there is a tug of war. Buyers and sellers are equal. That's why it's called the equilibrium. So at this point, you don't know who is control of the market, right? And typically in a downtrend, we want to see price come to the premium for us to sell, and if we are in an uptrend, we want to see price come to the discount for us to buy. So at this point, price is not at the premium, either it's at a discount, it's at a 50% level. So at that point, we don't know who is control of the market. So I just remove this thing, and I want to see my institutional reference points that are up to the premium, right? I have come to trust the ones that are the most extreme ones on my premium level. You can see this supply zone, right? I want to mark everything. Yes, that's my supply zone. Let me name it. Supply zone. And now my next thing is to understand the market narrative, right? Yes, we are in a downtrend, break of structure, retraced up to the supply zone. It has taken a break of structure. I want it to go retrace up to this supply zone before we continue to the downside. So typically this is what I want to see, right? Yes, we have this low here, but this low we have seen that it is at the 50%. That's the equilibrium. It may work, and again it may not work. All right, this is my supply zone, right? Yes, I know we have another supply zone here, right? And it's very clean. Yeah, but now the question with this supply zone is that some part of it is at the 50%. That's the equilibrium, and we have said that at the equilibrium there is really no one in control of the market. This is where the war now is. This is where the people, the buyers and the sellers fight. So you don't know who is in control. Is it the buyers or is it the sellers? Alright, that's the equilibrium level. Just price is at an indecisional point. I say that. For me to sell comfortably, I want to see price come to the premium, right? Where price is cheaper now, right? To this point, price is cheaper and now the sellers are given priorities to say not cheaper but expensive, right? We are in a downtrend. Premium is expensive, discount is cheaper. So when price come to this supply zone, that's it deeply into premium. I want to see price to go down. So I'll mark this as my inducement, right? I'll come the next video. I will explain what an inducement is. Some people confuse it with liquidity, right? This is an inducement. Inducement is it's not liquidity. Inducement is what brings liquidity into the market. So I'll mark this as my inducement and wait price to come to this level. Yes, I understand that price may continue from this level to the downside, but that's not the move I want to take. I want to take the move that will give me a good risk to reward, and I want to take the move that will protect me, right? Up to this point, you can take a move, it may work or it may not work. It's a 50-50, and that's because we are on the 50% of the Fibonacci tool. That's the equilibrium. So I don't want to gamble. I will wait price to come to this supply zone that's in the premium, and then from there I can see the sell price to the downside, something like this, right? Up to this level. I not target at this level, but my take profit will be this point, but generally this is where price is coming to, right? So that's what I have on my DXY. And my rule is that once I've marked my area of interest like this, I don't go there, I don't go to the lower time frame until price has tapped my area of interest. So I'll wait price to tap my area of interest, then I'll go maybe to 1 hour, 15 minutes, 5 minutes to take my trade. Alright, so up to this point, I'm watching. Alright, another reason why I'll not take this trade from this supply zone is that price has not taken any significant liquidity. Alright, for price to move, it will have to take liquidity. Alright, we have medium liquidity and major liquidity. So up to this point, price has not taken any liquidity. So if I'll enter from this point, there is a high chance that I will become the liquidity, right? Because my previous day high has not been taken, and my previous day low has not been taken. So since I want to sell, I want to see my previous day high being taken for me. Then I can consider taking the sale, right? This being the new week and this Monday, so no rushing into any trades that will make your account bleed this early. So that's my DXY. DXY is the dollar index. What I've done here, I'll just go and replicate it on EU or GU, but I'll now do the opposite, and that's because they are negatively correlated. Now up to this point I want to sell DXY when it comes to this level, but when I go to EU or GU I want to buy them. So that's what I have on DXY. Alright, on gold, I wanted to see this buy, but price was crazy the last hours of Thursday and Friday. But typically I want to see price do some buying before it continues with a sell, right? Generally we'll see price selling, right? Gold is bearish at the moment, right? From today you can think that price is bullish. Like, let me show you what's happening on the weekly time frame and the monthly also. The monthly will tell you that gold is bearish. Gold is bearish, and that's because you can see the last month how it came strongly, very strong to the downside, right? Very strong bearishness, and you can see the current month to try to go out, but now it's facing some rejections. So you want to see price take the previous low of the last month, right? It has not taken the low of last month, and we also have very big fair value gap that market is targeting, right? This is the fair value gap that the price is targeting, and we have also this order block, right? So from the monthly we are bearish on gold. We want to see price take the previous month low and trade to this fair value gap, and long run to want to see it come to this order block. On the weekly time frame, the same thing, right? Also have this imbalance right there, and this the demand zone that we will want to see price have some reaction from, right? So this is my inducement now, right? This is my inducement, right? I'll come and the next video I'll talk about what's an inducement. People confuse it with liquidity. This is an inducement, right? And that's because some people name this as a demand zone and they want to buy from here, but they forget that we have higher time frame targets below it. So price want to clear all this, right? Price will want to clear all that liquidity up to this fair value gap or even to this level, and then from there we can see some reaction to the upside, right? So typically gold is bearish at the moment, right? So it's buying, but it's going to sell from some point either from this supply zone. Then we continue to the downside, but for now I want to focus myself on DXY as I have done right there. Alright, I want to focus myself on this DXY as I have done it here. Alright, I want it to come out to this level. If it does something like that, then I can take the sale confidently. So that's it for now. Always you are just one trade away.